everyone's always looking for a reason why prices moved. JC knows as well as I do, just because it broke out or because it hit support or whatever. But I think more and more people are realizing that price is the news a lot of time. When you're looking at your headlines going, why is it up? Why is it up? Why is it down? It's because there's more buyers than sellers. It's just that simple. It's supply and demand. And I'll bring it back to the Anchored VWAP because that's 100% most objective way that you can look at price action from any point on a chart.
Today's show is sponsored by Public.com. Public is an investing platform where members can build a portfolio of stocks, bonds, options, ETFs, crypto, and alternative assets, plus get an industry-leading 5.1% APY with a high-yield cash account. I have an account there, and so does my daughter Rachel. Public's high-yield cash account has one of the highest rates in the market. They have a higher interest rate than Robinhood, SoFi, Wealthfront, Betterment, Capital One, Marcus, Ally, Bank of America, Chase, Citi, Wells Fargo, Discover, and American Express. There are no fees, no subscription required, no minimum balance requirements, no maximum balance limits, and unlimited transfers and withdrawals. You also will receive 20 times the standard FDIC coverage of up to $5 million. Public also has recently launched options trading, where you can earn up to an 18-cent rebate per contract traded. To get started and learn more about Public, go to public.com/trends with friends. This is a paid endorsement for Public Investing. 5.1% APY as of March 26, 2024, and is subject to change. Full disclosures and terms and conditions can be found in the podcast description. U.S. members only. Shannon, welcome to a special edition. We're going old school today on Trends with Friends. This is 4 dudes that were very early. I mean, if Josh was here and Barry was in a little screen and we all just made fun of Barry for an hour, this would be perfect. Oh, we got his books.
I'm gonna give some love.
So welcome Brian Shannon at Alpha Trends, who somehow, despite the drugs, the guns, the
fireworks,
he looks fantastic. The Shannoni from Planet Shannon is joining us. The Planet VWAP. All right. So it's a special guest because the guy there's a million ways to invest. Brian's come up with his way. Probably one of the best. The guy lives great, has a little VWAP machine, DDAP, VWAP, DWAP. He could be a stand-up comedy. He's so precise with his delivery of VWAPs. But so we're excited. It's Trends with Friends. Welcome, everybody. We are in May. And Phil, where do we want to start?
Shannoni, first of all, we're going to give you so much love in just a little while. We're going to start with Netflix. Howie.
Unless we run out of time on Netflix, Brian, and then Shannoni, you'll be back next
time. And then you'll come back in like 3 months.
Yeah.
We're going to talk about Netflix. Netflix, I don't think this is an all-time high, but it's been trading really well. And Howie, you said you wanted to talk about it, so go.
Well, just quickly, I already know where JC's going to go with this, and I agree. I feel bad that I bought a little again. Again, I'm direct indexing and QQQ. So keep that in mind, everybody. But I do own stocks, and I added some Netflix. Right now, I'm at a high, the most stocks I've owned in a while, just because the market's been, eking me into the market. That's what trends do. So I am due for a walloping. But here's what I like about Netflix, right? Like AI, EIO. Everybody who wanted out of this stock is out. Anybody, to me, it's well past all-time highs here because everybody who wanted out of this stock got out when Ackman got out. Ackman was buying this stock on the dip in 2022 at $400 or $500. He's the guy screaming at the bottom there at mid 20. He's one of those spike downs in the bottom, which is like anybody. We've all been there. We've all felt what Ackman felt. He gave up on Reed and Ted Sarandos right when he shouldn't have. And so here we are. We flash forward. I feel we're already at an all-time high, but JC will tell us 710, close above 710 is better. I don't disagree with him, actually, but I'm in a little early here. Obviously, I own it through the indexes. What blows me away from Netflix and why I brought it up today is Ted Sarandos, who's been there 25 years, started a video store. I heard him on Dana Carvey and David Spade's show. Just a regular guy, right? Loves comedians. He's built up this, what he's done for comedy, which still no one pays attention to, is what he's going to do for live sports in every vertical in the world, right? Only YouTube can be compared to Netflix, maybe TikTok, but I don't use TikTok, so it's hard for me to say. But I live on YouTube and Netflix. Netflix is so misunderstood now that they have ads, now that they have lowered their churn with ads product, and the fact that their algo could not be worse, right, heading into a world of AI. So just was the chart I wanted to throw out there, and I want to see where JC would look at this, and Brian may have a VWAP version of this if he can pull up. But JC, anything you see here, or would you wait till 710?
Yeah, I mean, the trade was to get long when we broke out, right? And it gets back into that range with the target back at those former highs, just above 700. You know, I mean, these are clean trades, and Brian will tell you that, you know, these former all-time highs, they tend to be magnets. And, you know, when you see a series of higher lows and higher highs heading in that direction, you know, I mean, it's hard to bet against that, right, Brian?
Yeah. I mean, the trend's been in that uptrend for the last year and a half, you know, since the 2022 low. Buying the breakout is actually kind of foolish, I think. It's similar to buying Bitcoin breakout there, you know,
you
at the
didn't like
beginning
that
of the
breakout
year.
above 460? That was clean as hell.
No, the breakout beyond
fight,
700.
Oh,
700.
Yeah.
The all-time high
That's the
breakout,
target.
with the so-called breakout, where people say, you know, the VWAP from the prior high, Howard, is at about 350. So buyers are well in control since that.
Buyers
prior
are
peak.
well in control. Exactly. So I do check VWAP once in a while. So buyers are well in control. The other thing I want to talk about, because, you know, I just love the company and the AI war. Who's it going to benefit? I think, like I've been talking on this show for a while, it's going to benefit Google because they have the Android phone. It's obviously going to benefit Apple, even though everybody's not talking about them because everybody thinks they don't have an AI product. And it's going to benefit. I've decided that it's going to benefit Netflix, and that makes them better in a world where they have no real streaming competition. Meaning, any company that's already in the lead will. And big is going to get a huge benefit from AI, and that's we just haven't talked about it. And I wanted to bring it up. And anyway, sorry, but I'm so bullish on what they're doing around comedy and how it translates to finance. Like, they haven't even gotten into what this group is into. When I can go to Netflix and watch lean back stories of like great trading and great investing while I'm on Netflix. So every category, including live, is going to fall to Reed and to Ted Sarandos. And it's because they went and understood, they truly understand talent and they truly understand verticals. And comedy is going to open up a lot of what they're doing with comedy is mind-boggling, because a comic you and I, this goes to trading too with ideas, a comic you and I don't like can still have millions of fans around the world, right, that we don't find funny. And that's what people are getting wrong about comedy, is thinking that it's a small audience, but they're building superstars out of people you and I will never hear of, much like TikTok. So I think there is as close to, and so I think they're undervalued based on what a TikTok valuation. Anyway, I think people are going to be very surprised to see that stock double and triple once it really gets going. And as Brian said, the owners of the stock are not up so much that they're selling. They're very strong hands in a market that's truly going to benefit them. So it's kind of like my fave idea. But I guess I should be looking to buy on dips, not on strength. Go ahead.
Okay, next up. Okay, so beautiful. Next up, we're going right to Shannoni. Alpha Trends takes on the market. Number one, I just want to give him a shout out because, you know, every genre, every area has a canon, right? So if you're talking about, like, literature, maybe Shakespeare or Moby Dick or, Hemingway is like a part of the canon of that area. And so with Brian, he doesn't just have one book that's a part of the canon on technical analysis. He has 2 books that he wrote years apart that are related but very different in the way they approach the market. They're complementary. And so it's just an honor to have you on today, Brian, and to be just old friends with you, bro. I mean, this group right here, like
Amongst
Howie
friends.
said at the top of the hour, is just an old crew from back in the day.
I'm proud to be with all you guys because each one of us has gone and, done great things, really, our own accomplishments. JC out there in wine country, tasting his wine he bottled up in 2001. And, Howard, you talk about Netflix and comedians. I think that's what Stocktwits did for us, realistically, is that it helped put us on the map where we could be toiling away in our spare bedrooms, looking at charts and geeking out at that and sharing them with a handful of friends. But what Stocktwits has done is brought that community together and elevated the people who consistently have good content and let us get our audience out there and help other people build their niche audiences in the shit coins, the penny stocks, the short sales, whatever it is. There's a million different ways to make money in the market, but each person can shine and find their audience. And that's what's beautiful about, Stocktwits in particular, I think, compared to Netflix.
Yeah, it's true. I didn't think we'd be here 16, 17 years later. So I'm really happy that people are really, from where we started, people are successful. That's why I think brings me back to the Netflix story in the end. It's like to see those 2 guys still running it, Reed Hastings, and, you have all this talk about people wanting to build 20, 100-year companies, which is bullshit, right? Like these founders come to me and they're like, oh, we're building a 100-year company. I'm like, how about building a business that just gets it to the first year, and have a good enough idea. Like I didn't plan for Stocktwits to be around and growing 20 years later, and I wouldn't have planned it to have happened in the way it's happening, right? So I think that's what makes
and
Netflix.
How are we back at the helm?
Yeah, now I'm back at the helm. But it's like Netflix, right? Like I didn't expect it to evolve. I mean, they were shipping fucking DVDs, man. They just stopped shipping DVDs in red envelopes like a month ago. They finally just said enough. So a lot more work to be done, but it is.
There's some grandma out there somewhere who's like pissed off. She's like,
dude,
oh,
it was
what?
a great service.
No more DVDs. What the fuck?
Dude, you go to fucking Albertsons or Safeway, and they have red boxes still in the store. Listen, 50% of Wells Fargo customers still get their statement by mail. God bless the non-digital economy, I guess. All right, so thank you, Brian.
Listen, I wanted to come back to Brian because listen, there almost 20 years ago, I used to run home after work to watch Brian Shannon's videos after the market. Like this is what we're talking about here.
What does it look like if you're running?
This is almost
he
20
was like
years
one of the first guys on YouTube ever. Maybe the first doing technical analysis on YouTube, right?
Well, who discovered Brian?
Specialist on the New York Stock Exchange.
Who
right?
discovered Brian? Was it you, Phil, or was it Josh or JC? Who discovered him? Maybe me?
I don't remember. I remember we built his blog on the Stocktwits blog
I discovered him because I was interested in his technical analysis. I mean, this was way before I was a CMT. I mean, there would be no JC if there wasn't a Brian Shannon. I'll tell you that much. And Perlman and Howard found Brian through social because that's how I learned about Twitter originally, because Brian was talking about in his videos like, oh, today on Twitter, we were talking about this. And I was like, what? And then so you guys discovered him through social. I discovered him through the markets.
Brian was always so good at, like, I still don't know how to do the internet. And Brian was always so good at, like, just not showing his face and, like, clicking around and showing charts. And, like, I was always jealous of just the simplicity of how he could even use the internet and YouTube. Because I was always just flustered by, like, how to be on the internet. Anyways, all right. So
and still are today.
Howard,
that's amazing.
By the way, Howard, you're the one who got me on Twitter.
I think
you had seen my YouTube stuff. Right. You had said, "Hey, Brian, get on this Twitter thing. You got to check it out." I did it for about a month and I was thinking, man, I don't get it. This is stupid. And I quit and I just let it sit for about 3 months. And he said, come take another look at this thing, really. And I said, okay. And then I embraced it. And man, thanks for being persistent with that one, because I would have missed the boat.
I would say I take credit for two things, right? No one asked, but I take credit for two things. First of all, just telling Phil he's a fucking putz before anybody else told him. Oh, sorry. Did I say that out loud?
Right there.
No, I take credit for two things.
By the way, he did the same thing with me. He was like, just get on this Twitter. I'm tweeting about what I had for lunch and where I pee in New York City.
Yeah, so I was doing that, and I give credit to Andy Swan. I didn't even want to do that. The Swanator, Louisville, that's where you got to give credit to Andy Swan, who hated Twitter, but was like, Lindzon, this is your thing. You need to be on it. And so he got me, even though I was like an investor in it through a bunch of my companies, Bitly and whatever, and I just didn't get it. iPhone hadn't come out yet, and I was just so... And so Andy got me on, which led to all you guys getting on. And Barry Ritholtz, like, he thought it was the dumbest thing. And I think I got Brian on, you on, I got Barry on. So Andy kind of was the guy who got me on, at least doing the P stuff and the location-based peeing.
I think we all thought it was dumb at first.
Yeah,
because it was BlackBerry. I think we would have, because
resource.
it was a BlackBerry. But then I also did the dollar sign. So those are my two big things. And then with Robinhood, I don't really talk about this much, but Phil and I brought them 50, 100,000 people at the beginning because we knew it would work. Right? We all knew the insight. We were all there in 2014. We were like, Howard's never going to build a brokerage. I was scared of building a brokerage. Robinhood, we knew every user on Stocktwits would use Robinhood, and people think Robinhood. We were the guys who made Robinhood relevant at the beginning, and those first 10, 20,000 people, we all wanted to try it and link our accounts. So anyways, all right. So that's history.
Let's talk about
VWAP. And God bless.
Bitcoin Weekly. Brian Shannon, Bitcoin Weekly. You sent us this chart. Bitcoin kind of had a new all-time high going back a couple months, consolidated, pulled back in, and now you give us this chart right here.
Sure. Actually, if you look at this chart and you look at a weekly chart of Netflix, Howard, they look quite similar. And if this was a Netflix price scale, we'd probably be at about 58,000 on our way to break out past that 70,000. So the first breakout to a new high, you always have to ask yourself, where has it come from? And I mean, we rallied from 24,000 straight up, not straight up, nothing's ever straight up, but pretty straight up to that 70,000 level. And that's when the breakout people, the trained to buy the all-time highs, they were in late, of course. So we had to digest. We came back perfectly to the year-to-date anchored VWAP just 4 weeks ago. And that's where this new rally has emerged from. And I think this now sets us up for the next test up towards 100,000. Probably 90 to 100,000 should be here pretty quickly, I think, in Bitcoin.
So I'll chime in here. You've got two things, right? So you've got the technicals, which I trust Brian on and JC on, but you really have Larry Fink. I'm way too long these things through indirectly. I don't own very much myself, but through funds. So I'm talking my book, of course. But it's also the guy scared out of my mind because I was overexposed to these. We talked about Solana at 20, JC, a year ago where I was buying it. I've sold most of my personal since then. You have the government behind this they're caving, right? Trump, this election does two things. It just makes both sides pander to everybody because it's going to come down to 20,000 votes. So no one knows what's going to happen, but everybody's going to cave to everybody. It's going to be a fucking free for all. So crypto's the easiest thing to cave on. You get the young degenerates. So you've got Larry Fink. You got Jamie Dimon talking about retirement, and if he retires, whoever comes in next is going to be pro-crypto. And then you have the government caving on this thing right now, and Gensler's going to be gone. So you have like a perfect storm for a silly run. And we had Raul on, and love him or hate him, I love him just because I like his stories and the way he's got so much conviction. And as a media person, he calls it the banana era as well.
I saw that episode with Raul. That was a good one.
Okay, so I quick plug here. So, because we want to get his take on, we want to get
Such
his
a good
take on
book.
Bitcoin.
It's on my desk
But
at my
I just
office.
want to say this. If you don't know, if you're watching this and you're watching Brian Shannon and you don't know him and you're wondering when he's talking about the Anchored VWAP and what it is, and I'm not, I get nothing from this except for the fact that these are formative books. You just find this book, Anchored VWAP, Brian Shannon, and it will help you understand how any kind of asset moves. All right, go ahead.
Any asset.
JC, any asset.
Yeah,
JC.
I think Brian's completely spot on. I agree with every word he said. I thought that he would have some different opinions, and everything he said I think is completely spot on. We got back to those former highs in Bitcoin, and we've been struggling at those levels for a few months, which is perfectly normal. That first test of former resistance. Brian makes a good point that prices are above all those anchored VWAPs. So the buyers are in control, which I think should lead to a breakout. Ultimately, I don't know how long this consolidation takes. Maybe it only takes a few more days. Maybe it takes a few more weeks. Maybe even months. We'll see. But you'll see those new all-time highs. You'll also likely see broadening in participation in other tokens as well, which we do the same breadth work in crypto markets that we do in the stock market, right? It's no different. When you're seeing broadening participation, that's evidence of strength. So I think a new all-time high would most likely be accompanied by an expansion of other tokens breaking out to new highs as well. Even way down the cap scale. I'm just going to throw out an example. Look at Pepe the Frog is a $5 billion token, and it's making new all-time highs today.
We talked about it last week.
Listen, the relative strength is there in Pepe the Frog, whether you think that's funny or stupid. The relative strength is there, and it's $5 billion. It's not like it's nothing. It's making new all-time highs. You saw the relative strength out of Ethereum, I think, is really interesting as well.
The Ethereum's the key one, because with Ethereum
I don't know.
comes...
Listen, Ethereum's been underperforming for years, and Bitcoin's at an all-time high.
It's the key one for the on-ramp for the Schmendrick. Bitcoin is Bitcoin, right? You're going to have DeFi. No, Bitcoin is its own ecosystem because the smart people are moving to Bitcoin DeFi. Not smart people. The people that I look to, they're going to Bitcoin DeFi. Joe at a Symmetric that we'll have on. ETH has been a lagger because the ETH camp has moved to Bitcoin DeFi. So this ETH move is strong because it will help all the other coins that are reliant on the ETH as the internet. So it's interesting. I do want to. We keep saying VWAP, Phil. I'd love to just go back if Brian's ready to just walk through what VWAP is, because I think we got to turn some people into disciples, people that are lost and doing all these stupid trading. Brian can give a little bit of history of the VWAP, and then we'll get into a bunch of ideas. I think it's
sure.
A good
The
time
history is it was a benchmark initially for institutions, and still is today, to say, if I'm going to buy 100,000 shares of Netflix for my client and the current price is $648, we might have a 10-point range in there. And at the end of the day, you'd say, well, what was my price? And you could say, well, your price was $648 on that 100,000 shares. Well, you'd have no way of knowing if that's, accurate in fair in terms of what was the average price. So it's the volume weighted average price. It's the average price of every single share traded. If you get that VWAP price, it means you paid the average price. You paid a fair price for the stock that day. So it started out as that, just a benchmarking tool, and it's morphed into an analysis tool, whereas you can see who's in control. It's pure supply and demand driven. That's it. It's supply and demand only. It's price, volume, and the amount of time that you measure. So initially it was for one day. Now you can measure it from any point. You can measure it from a spike high 30 minutes ago or from all-time high in Intel in 2008 or whatever it was.
As the person here who actually understands Brian Shannon's language here, as a fellow chartered market technician, Mr. Perlman and Howard Lindzon, let's explain to the folks exactly what's happening here. His first book was technical analysis using multiple time frames, which is such a huge advantage as an investor or day trader of any time frame to be able to incorporate longer term perspective with more short term tactical opportunities for your particular time horizon. And that's such an unbelievable concept for all investors to understand and appreciate that I think that goes understated. And then exactly what he's saying now with the anchored VWAP, there are multiple time frames being incorporated with these different VWAPs and anchoring them to specific dates. So I just want to do a little translation there, Brian. You can jump in anytime, but I thought that was, so people understand really what's happening here.
Yeah, no, that's great. I sent Phil a couple charts, and one was that we had seen just a minute ago with the anchored VWAPs on the Bitcoin daily.
Perfect. Let's take a look at the Bitcoin daily, and we can see what you're talking about here. And why don't you just walk us through that? There it is.
Sure. So what we're looking at here, I've got 3 anchored points on there. I've got the year-to-date high, that's the red one, the year-to-date low, which is the green one, and the black is the year-to-date anchor from the beginning of the year. And basically it just says from the beginning of the year, as the stock price moved higher, the average price moved higher as well. And what happened was, of course, we got the Bitcoin ETF announcement about I think it was January 8th, if I'm correct. That's what that first spike high was earlier in the year. And then we sold off. We were below the year-to-date anchored VWAP. And once it broke back above that and it digested the initial move from the ETF, the buyers were back in control. And that's where we saw that phenomenal rally in Bitcoin that had us go from,
I remember
30,
you posting. No, I remember you posting
at
the green square there when the pullback recently. I remember you saying
just
you were going to test it. Yeah, I remember you saying. I tuned into you for that. Because I was a little nervous, but you were buying there.
Exactly. I didn't buy right there because and this was, this is something I write about, is I don't want to buy the touch of it.
Got it.
Because it's a potential, it's a potential level of support that we want to monitor as it comes down to it. I'm chicken. I don't want to be the guy who goes in there, risk my money, watch it drop 10% and have no conviction in it. I want to be involved in a position of strength. As it rallies away from that level and the buyers have regained control, then I can get aboard that nascent momentum, put my stop below that low, and then ride the trend, because the trend is your friend. And here we are, trends with friends. So that's where we saw the low of that pullback within, just a couple, statistical anomaly. It's not really, it's not the word I'm looking for, but insignificance basically at that anchor. We moved around a little bit, but then we got back above the anchor from the low of the year and just took off.
Yeah. So you wouldn't chase here, but the buyers are now really in control right now. The buyers are back in control.
In fact, I took a little bit off just this morning at about 7,600 or 70,600. I'm thinking we can pull back to about 68 and I will likely reestablish there. And then we're, like I said, it's likely headed 85 to 100 here in the next, 3 to 6 months. I hate those types of price targets.
Yeah. What I'm saying is you can just see now off that green box where you waited and bought some strength. You can see the buyers are back in control. It doesn't mean they'll stay in control. It just means that if you're long Bitcoin, you can sleep a little better right at this moment. Things can change, but this is what I love about the VWAP stuff.
Brian, how far down the cap scale do you go in tokens?
Now, who do you use for VWAP? Just for our listeners, we have to go through your daily, like where are you using these charts from? And you've built even though it's competitors, like tell me who you're using.
So for Bitcoin and or any cryptos and futures, I use TradingView. Okay. All my equity stuff I do on TC2000.
Old school.
It's such a great trading platform.
Does the same thing.
It's a great trading platform.
Workflows everything.
And to JC's question, how far do you go down? How deeply into the shit coins do you go?
I don't, maybe about 20 down or so. I mean, I'm looking at like
how deep in the shit coins do you go? That's correct. That's never been uttered.
I'm considering buying some Litecoin.
How much are you shoveling?
I've been super heavy. I've had 80% of my crypto assets in Ethereum. Now it's down to about 15% in the last 2 days.
I think you can keep dropping it. I think there's better.
Pepe is the 24th largest token.
All right, stop it with Pepe. We have other stuff to talk about. Is it the 24th? Wow.
Okay, let's
I
talk
JC,
about that.
The amount of
JC,
data
if they traded
that is being held in by that
Gemini,
Orioles cap is phenomenal. You take that cap off, everything disappears.
Dude, let's go, baby.
Let's
all right,
go,
crude oil.
baby.
Let's bring crude oil.
Okay, let's talk crude.
Let's crude oil. And then can we
give
do
us
copper?
the same analysis. We're closer to the green box on this one, Shannoni. So give us the analysis here and how you're thinking about playing this.
Sure.
Here.
So it's just the anchored volume weighted average price from the beginning of the year. People will say, well, what is the significance of that? If you think about institutions and how they get paid, and they're not just paid on absolute performance, they're paid on relative to their benchmark. If crude oil is your benchmark and you see that crude oil is up at $80, $90 per barrel, $88, $90 per barrel, you're not going to be a buyer there because it's so far away from the average price. But as it comes down into that average price, or if you're filling the strategic petroleum reserve, this is a place to do it. This is basically what's considered fair value for this year. So what you see is fund managers will start to defend that level. We saw it in Bitcoin. It's the average price for the year. So people who felt underexposed on the rally up to 70,000, as it pulls back to the year-to-date anchor, they're saying, hey, this is a logical place to buy. This is the average for the year, and I feel like I'm underexposed. It's time to add. Now we're seeing that with crude oil, and it's not getting the same type of response in terms of a rally away from here, but it has stopped going down, and you can clearly see there are buyers in this level supporting oil for this time. And if it starts to get going and back above that red anchor from the year-to-date high, that will put the buyers back in control from the highest point.
There's still, I would see here, if you put on this trade right now, you were JC, you would stop out below those lows. So this is probably an okay trade, but the buyers are not in control yet. This is just, interesting. What about copper? I would love to see copper if you could pull that up while we're farting around.
I don't even know the symbol for copper. I don't look at it, but I would tell you it's above every single VWAP there is.
I'm just hearing nothing but good things, but
if you scroll down to the chart where I put Compañía de Minas Buenaventura, this is a Peruvian miner, which I think is what you're alluding to there, Howard. So, for me, this is copper. This is, I think, what you need to know. A lot of these Latin American countries, they haven't been working. There you go. So a lot of these Latin American countries hadn't been working for a while. Tech was the story. Guess what? In 2023, the U.S. was an underperformer. Latin America was actually the best performing region. And here's just a good example of Peru making new 10-year highs. And Buenaventura is, gives you a lot of exposure to copper and gold. It's a lot of mining. And this thing's making new 10-year highs. I think this thing, and you don't hear me say, oh, this could double or triple. But this thing could double or triple. So
some of these copper stocks I shared yesterday on the stream in Stocktwits, oh my God, the charts are beautiful.
Yeah.
Well, let's take a look at that one. Let's take a look at that one. If you scroll down to that GME versus copper, there you go. Howard, you wanted us to post this. What I don't even know. I don't even think I understand that. Brian, we're going to come back to your SPY chart in a couple minutes, but
this is my chart.
What is this?
I'm just saying that Craig Shapiro, he's fucking great. I'm trying to circle through investments. I'm trying to get him to post more. But what this shows is, and he's trying to explain here, and I totally agree with this. It's just my favorite chart explaining copper versus GameStop, is that fundamental in a world of wash with speculation, in a world, everybody makes fun of technical analysis, but in a world of and why I've been long saying CMT is better than a CFA, is a world awash of speculation, in a world awash of greed and give me mine, in a world awash of on-ramps to blow your brains out and be a degenerate. Fundamental analysis has never been more useless. I'm not saying you shouldn't do it. I'm just saying this GME move versus copper and how money is just flying all over the place with no risk controls. We can make fun of it. We do. We can embrace it. We do. We can dismiss it at times. We do. But we have entered some era where fundamental analysis, and it could be because of Vanguard, it just could be because of market weighting, but to see how little fundamentals matter at the institutional level, as Brian's explaining with VWAP, now VWAP's available to everybody, so people can choose to be smart about every asset, even down to 20 shitcoins, as Brian held, or to a fake token like GME or DJT, or an SEC approved fake token, GME, and just the way Pepe can lean forward in his chair and the stock goes up without even mentioning GME. So this blows my mind because I keep talking about the degenerate economy. You have this mixing of the degenerate economy meets Brian's 2 classic books on technical analysis. So it's a dream market for Brian because he can apply VWAP and something that the institutions use at the retail level across multiple timeframes to JC, who's doing intermarket analysis. People spoof at all that, like, even though it's the most important thing we have going right now, to Phil and I trying to make sense of it all as behavior people going, this fucking makes no sense. I think it makes total sense when you look at how at the same time GME is going up, there's people screaming that copper is the highest conviction trade they have, and it's barely moving. So it's just so that's it on that chart. I think it just screams that fundamental analysis has been tossed out the window. Good or bad, I don't care anymore. I just think there's something for everybody in this. Well,
hold on. And I want to hear Brian's take on this, but let me just tell you the way things, I think that investors either forget or are not aware that there are other dynamics that are driving prices outside of fundamentals. In the case of GameStop, you had massive short interest that was getting unwound, right? And there's market dynamics taking place there that are driving prices higher that have nothing to do with how many stores the company has or doesn't have or whatever cash. There are margin clerks involved. There are other positions that are blowing up, that GME tends to be a source of funds. There's all kinds of dynamics that have nothing to do with the fundamentals. Same thing in the futures market with copper. We can go on and on and on about the market dynamics of futures and cocoa more recently that may have something to do with the fundamentals of copper, but there are so many other dynamics going on that are driving those prices. So it's not that fundamental analysis isn't important or you don't have to do it or anything like that. It's that just be aware that there's other stuff going on that has nothing to do with that are also driving those prices, and in most cases are the major factor of how those prices are being driven.
Good point. Maybe I should say there's never been a point in time where fundamentals, there's more things driving it than just fundamentals because of Robinhood, Coinbase, TradingView, Stocktwits, Reddit. So we've never been in a period where there's more things that matter besides fundamentals, and that's making this market bonkers, which is part of why after 17 years I like the markets more than ever. I'd almost given up on the markets a while ago, and even though I index and direct index mostly, I've never had more fun. I've never felt more in charge of being able to make decisions all day, every day. If I really wanted to, I feel like I could start a hedge fund and actually outperform. I'm not saying I would outperform. I actually feel like if I were to start a hedge fund tomorrow, I'd be as confident as I ever was. Now, I'd have to find clients that understood that I could be all over the place and I would have no strategy other than whatever is working. But I actually, for the first time in my life, not that I want to bring this upon myself, with the tools around available to me and the breadth of expertise around me, I could manage a small fund and I would truly think I could beat the market. That could be the sign of the top, though. But kudos to Brian.
Confidence moves in direct proportion of underlying assets, right?
I don't think so.
If you look at,
I believe you. I totally believe you. Uh-huh. But I also have with stuff that I'm doing with Riley on with our data on
for you, Howard.
Stocktwits.
I'm saying is a general socio.
The biggest thing. Chamath was all these people that made money in the private markets that then started doing crossover investing was the biggest trap that we've seen in the history of the markets that will play out for the next 10 years. All these people that were growth private market investors that all of a sudden were setting up, I'll hold this stock forever. I know how the public markets work. People, you know what I mean? And have been buried and will be buried for the next 10 years. So that's exactly what you said, Brian, has happened at it's the SoftBank curse. Everybody thought they were massa. So,
and he was the original 100-year investor. And I think, Howard, what you're talking to, the point you're making about fundamentals and price action is everyone's always looking for a reason why prices moved. JC knows as well as I do, just because it broke out or because it hit support or whatever. But I think more and more people are realizing that price is the news a lot of time. When you're looking at your headlines going, why is it up? Why is it up? Why is it down? It's because there's more buyers than sellers. It's just that simple. It's supply and demand. And I'll bring it back to the Anchored VWAP because that's 100% most objective way that you can look at price action from any point on a chart.
Yeah. I will share in the notes at TC2000. Like Brian's at his Alpha Trends. He's got his YouTube. And again, this goes to my Netflix story earlier. Brian has 120,000. He's not promoting himself. He's not. This is the power of YouTube and what I say Netflix is. There needs to be a Ted Sarandis of investing. Maybe I was supposed to be that person, but I got sidetracked only on Twitter and Stocktwits, not on YouTube. Brian and JC, Brian and Josh were the first guys that really dug into YouTube, right? There's been no Ted Sarandis of investing, but if they were, Brian and JC would be the first people to roll up in that spot. Because Brian proves that if you build it, they will come. Brian has 120,000 subscribers. It's like a fucking madman on YouTube. So kudos to that move too. Go ahead.
Well, I did it because writing's so time consuming. It's so much easier to get in front of a microphone.
An idiot. I really
look at the charts and just start talking. And writing's, I mean, you and JC write every day, and Phil, I know you write a lot as well. Writing those books was not brutal. A labor of love.
Yeah, it's brutal.
It was just something you had to get out.
Yeah.
It's just something
those
you
are
had
the
to
best
express.
books. Those are the best books where it's like, this needs to exist and I'm the only person that can do it and I got to get it done. Like those are like Morgan Housel says the same thing. Like this just needed to get out there. You talk about Perth and her ETF, about the Freedom ETF that she has. She's like, this ETF just needed to exist. I needed to make it happen. Like I've been noticing this over the years. Like the best stuff was created because it had to be created. Super cool.
Okay, so let's get to that SPY chart, S&P 500. Brian gave us a SPY chart. We could take a look at the VWAPs there as well and where we are, sort of how far we are we extended or whatever.
Well, the same point was here again. It's the year-to-date Anchored VWAP. And I mean, you just can't make that up. We saw it in Bitcoin. We see it in oil. Here in the SPY, 12 days ago or whatever it was, we touched on the anchor from the beginning of the year, absolute dead on to the penny. And then we saw this, 8% rally straight up from there. It's just, you've got to watch these levels. And as it got back above that red anchor, that's where we really knew that the average participant, the average short who felt smart after selling short to prior high, they were making money all the way down to the anchor from the beginning of the year, but they lost that as soon as it got back above the red, meaning on average, the average short seller was losing money at that point. The average buyer from the highest point, dollar cost average every week, month, whatever, now they're winning again. The confidence, again, moves in direction to, where you're positioned, then they're back in control.
And we're extended here for your taste?
From a short-term perspective, in terms of new purchases, definitely. Unless I think the more extended you get away from someone, you have to shrink your time frame and say, okay, now we've rallied 8%, 10%. It's time to look at this and say, do I want to commit money for the next week, 2 weeks? Probably not. Instead, this is probably where if you're going to be involved in the SPY, you probably got to be doing it on a day trading basis. Wait for the next higher low and then buy as it emerges from there. And maybe it pulls back to that anchor from the previous high, which would be a nice place for it to find some support, some structure in that area.
JC?
I mean, listen, like I said, I think Brian's spot on. We'll get into some of the bigger dynamics of what's taking place in the market. In terms of the SPY chart itself, I think exactly what Brian said is right. I think it's more of a function of, what else is happening, right? Putting this chart into context with all the other things that are going on, I think is really, really important. Unless like all you're doing is trading SPY, which nobody none of the four of us do that, right? Like, I think a lot of, I'm sure Brian trades some SPY. I've traded some SPY and some options, sure. But like, that's a fraction of all the other things going on that we think are important. Our friend Joe Fahmy, he always says, if you trade the averages, you'll get average returns. And that always stuck with me because trading those averages is really hard, right, Brian? Have you noticed that? Isn't it better at the stock level?
Yeah.
All right. So speaking of that, let's move on. Thank you, Brian, by the way. And so what we're going to do is now we had JC commenting on some of your charts and what you were talking about. We're going to flip it and we're going to get into the most interesting charts in the world. We touched on one earlier, that the Howard Copper one, Howard Copper GameStop. But we're going to take a look at this one right here, which I love, JC, because it's so simple and it just really encapsulates everything that's happening on a global scale around the world. This is the All Country World Index making all-time highs.
Yeah. And more importantly, not just making new highs, but it's really the components. In other words, we're seeing more countries around the world making new highs than we've seen in years. So it's really the breadth expansion globally, because the All Country World Index is still going to have a lot of United States. It's still going to have a lot of the things that have been working, but seeing the actual composition of the world breaking out simultaneously is very powerful, right? So, we came into February, sentiment was hot. Remember, newsletter writers were the most bullish they had been in years, individual investors, active investment managers, sentiment was a headwind in February. And what did we get? We got a 9% correction in the NASDAQ. Technology corrected 10%. Large cap technology down 10%. Small cap technology down 14%. Consumer discretionary down 8-9%. Communications 8-9%. Regional banks, I think, were down 16%. Double digits in transports. Small caps were down double digits. So we saw over a 3-month period, a lot of indexes and sectors and groups either fall or trade sideways. Things like financials and industrials actually held in pretty damn well. You got rotation into utilities and consumer staples, which is perfectly normal. And now sentiment is a tailwind and no longer a headwind by our work. So now it's like, okay, are we seeing broadening participation? Are we seeing higher highs? Yeah, that's exactly what we're seeing. You were seeing it across the globe. And then Brian was talking about how once the S&P 500 got above its anchored VWAP from the local highs of this year, I believe in March, things really got going from there. We're actually seeing that very consistently among sectors and stocks like the XLK technology, for example, and a lot of other stocks that are reclaiming those anchored VWAPs are really ripping higher. Brian talked about that in Bitcoin as well. So there's a common theme here. So one of the things that I like to do in our breadth work is like when you see a situation where a stock or a sector is doing something, it's like, well, how are the other sectors and stocks around the market behaving when they have been doing that, right? And there's information there by looking around at the brothers and cousins of whatever it is that you're analyzing is how I look at it from a breadth perspective. So I think here's another one. Throughout this year, you had a lot of markets that were correcting. There was some relative strength, but the median stock was flat pretty much all year. And you're seeing high beta stopped outperforming low volatility. You're seeing junk bonds stop going up, small caps stop going up. Part of this breadth expansion globally, to see these breaking out as well from an intermarket perspective would make a lot of sense. So this would be, one of the next things that we're looking for most definitely. And then just to bring it back to a lot of things that Brian is doing, looking for opportunities to buy stocks, what this work suggests for us is how should we be allocating our time? Should we be spending more of our time looking for stocks to buy? Should we be spending more of our time looking for stocks to sell? Should we be spending our time putting on delta neutral strategies just to collect income? Like, what should we be doing when we get up in the morning, right? Is why we're doing all of this additional work. And in my opinion, there are more opportunities from the long side over the last couple of weeks. And I think there continues to be since October, right? I think there's opportunities from the long side. That's what all of this means to me, at least. Brian, I'd love to hear your thoughts on that.
Yeah, our approaches are a little bit different. Actually, pretty different, JC, is I don't really look at the global macro at all. I trade U.S. equities, so I don't really care what's going on in Japan. I don't care what's going on in the U.K. or some of the other little countries. And it's not that they're not insignificant to the global game, but I don't play that global game. I play individual stocks. So I'm a bottom-up approach. I look at individual stocks and I start to notice things like, hey, these semiconductors are starting to look good. A couple of weeks ago, I started noticing some of the regional bank stocks were starting to percolate and look like they're getting ready to go. Then I look at KRE and say, hey, look at that. Well, what's going to move first, NVIDIA or Intel? You can't look at the SMH by itself. You have to look at the components that say NVIDIA is starting to lead. Hey, this one's breaking out. That one's starting to go. It's not that the rising boat is going to rising tide is going to lift all boats like the garbage such as Intel. But if you look at it from a bottoms up perspective, you often get that head start look to say, okay, things are starting to percolate here. What could be the way energy did, 6 months ago? The energy stocks were just breaking. The XLE was just breaking past the anchored VWAP from the prior high, and then it went on and rallied. It made a new high, and then it started to digest. So the people who are, when it was at new highs, and I'm not saying this you at all, JC, I'm saying the people who are looking strictly at the 52-week high are often late to the game. And that's why I love it when something like Bitcoin, has a big rally, then it breaks out to a new high. I always say, where has it come from to get there? How much energy has it expended? I love to sell some strength on that breakout. I just did it in a couple stocks this week, which, BRCC, it broke out, and that was so far the high. It's just, it all goes back to, as Howard and Phil were saying, it's the psychology. And how does all this data come together to form the picture of what are people doing? What are they most likely to do? Is there a backstory to it as well? I view the fundamentals just the same as the technicals. They're telling me a story that, hey, the sales and revenues are good. Great. Who cares? Not me. But I do know that there are fund managers who just buy growth stocks, and they're going to be interested in this. As Netflix pulls back, they're going to be buyers for it because Howard told me the fundamentals are good. And I know that, people who have done their work, that's going to give me extra confidence. It's the psychology of what are other people doing on the chart? Why are they doing it, possibly fundamentally? And the global macro picture adds a little bit of confidence to that, then that's great as well.
Brian, can you talk about time horizons? Like, you literally wrote the book of technical analysis using multiple time frames. So, as an investor, trader, day trader, whatever it is that you want to call yourself, can you speak to how important it is to identify what is your time horizon versus what other people are doing?
Always. And that's, I think you said something recently, 90% of all fights on Twitter occur because someone doesn't agree about what the time frame is. And it's so true. And I make it clear, I'm a swing trader. That's what I do. I've tried to be an investor. I'm trying again, and I'm getting my ass kicked in something. Every time I try to expand my time, I'm not getting my ass kicked, but anytime I try to expand my time horizon, I'm not good at it. I am really good at stocks for, 2 days to 2 to 3 weeks, pretty much maximum. Those are my trends. Anything beyond that, I start to give it a little bit of room because I start to think, well, the fundamentals support this. And I lose conviction because I look at price. And as you guys know, and everyone knows, I say only price pays. And I start to look at the price action versus what the story is. I get confused and I just sell. I'm like, I don't want this anymore. It's going down. This is toxic. It's poison, even though the fundamental story might still be in existence. So I have fundamental beliefs about companies, and I try not to let that cloud my decision-making in my swing trade. So I long-term, easily Bitcoin goes to 100,000, but am I going to hold it from here to 100,000? No. It's Linda Bradford-Ratchke's quote is, it's obvious what something will do. What's not obvious is the path it takes to get there.
So I work with a bunch of traders now, more and more, active market participants. And I'm finding, and this is so interesting listening to you guys talk, because I'm finding more and more the work we do is about the trader finding who they are, their identity as a market participant. What is their natural fit into the market? And so you guys have been around a while and been doing this for a while and have naturally grown into and developed into who you are, your trading identity. So if you're watching this and you're out there and you're running your own account or whatever, and you're struggling, or even if you're having some success, but you're still kind of feeling around, let yourself grow into who you are. Like what you're talking about, Brian, with the time frames, and JC, the stuff you do is incredible with Intermar. What you just said about looking at nations and breadth for this all world index is like fucking awesome, by the way.
And think about how funny this is. Brian was an inspiration to me. I'm a technician because of Brian Shannon. And he said earlier that he doesn't give a shit what's going on in Japan. The Nikkei futures were the first thing I looked at this morning.
I don't think I've ever looked at the Nikkei futures.
The other thing that Brian says that's cool.
I don't know their symbol, that's for sure.
It's still no matter how you do it, it still comes down to your own money management. The thing that gets thrown around a lot because of politics is stay in your lane, right? And I think it's so misused because staying in your lane is an art, not a insult, right? Like it's being used as an insult because of politics and news and media. But man, there's no faster way to become a wealthy person in a place like America than to stay in your lane. The markets make it so hard for you to stay in your lane. Like the SoftBank effect that we were talking about before, that the up market drags everybody in and makes them feel smart. But you will get no better reward in any job or any career than learning something well and sticking with that in the markets. Now you can do multiple things. Like Brian said, he's in a long-term investment idea right now that's not working for him and it's driving him nuts. So no matter what, we're going to keep making mistakes, but staying in your lane and investing is really important. And it's not something that you should be embarrassed about. It's something that will make you succeed, much like why comedy is so successful. Jerry Seinfeld does it one way, right? He doesn't do dirty talk. He doesn't do trash talking. He doesn't do politics. He could have, but he didn't. Jon Stewart tried to get out of his lane. Guess what? He's back at Comedy Central doing exactly what he did before, as popular as he's ever been before. These people everybody gets sucked into doing more. But in the world of money and investing, staying in your lane is like the fucking best thing that you can do. And staying, in that peloton of people that are in your lane and do it best, just like cycling, is the best thing you can do. So I think the number one mistake people make is trying to do too many time frames. They really need to understand what they are. And that's why I advise people, like I've come fully around with this index. So you know what the averages look like. And then, you can have your play account, but at the end of a certain amount of time, you got to look at your trading account and go, for all the aggravation and for all, either my strategy is not working or I should just index. Right? Because average is fine, because that's what the average is. And you may not be cut out to be better than the average, but there's, the great thing about the market is you can try. And this is a skill that you can develop over time. So all of us in these 4 boxes have done it differently.
So I'm looking at our outline for today's program, and I'm looking at the clock, and we're an hour in, and we've covered about half the charts that we had on here. We had so much stuff on here. I just want to cover one more thing because I have a question for Brian and for JC, both of you. Ed Yardini posted a chart last week or early this week. So last Friday, the Dow Jones Industrial Average made a new all-time high. Don't you love it? Crossed 40,000 for the first time. And Yardini posts a chart in his latest letter, where he says that he thinks that we're going to 60,000 by 2030. So that's about 5.5 years away, and another 50% move. And then he drops this chart on us with the little, what is that? Like a Fibonacci fan? Is that what that's called? I don't even know if that's called, but I think that might be what it's called. But anyway, I'd love to get your takes. JC, why don't you just tell us, what are you thinking here?
Yeah, I think those are Gann lines. But I got to tell you, I mean, listen, I don't know where he's getting his math of 60,000, but if you take the high of the great financial crisis in October of 2007 down to the low in March of 2009, that target is just under 40,000 is a big target. The next one is 60. And the market has respected these levels. So if we're above 40,000, the next target is 60. And those are measured moves based on that financial crisis. And the market has been respecting these levels all along. I'm not a diagonal trend line guy. I don't really understand that stuff. It gets me more confused. I'm sure that Mr. Yardini has done his work, and that's great. For me, I'm more of a horizontal line kind of guy. If we're above 40, that next target's 60. When we get there, I have no idea, but those are the numbers.
I hate price targets. I hate numbers. I'll chime in quickly. If I'd looked at this chart, I'm so glad I do index, because I'd have fucking be scared out of this thing 1,000 times based on what I'm looking at that chart. The thing here is, and I'm with JC on horizontal. I got to see things horizontally, mentally, for me to make decisions. But if you had told me that in 2020, looking at this chart, that rates would go from 0 to 7% and we'd be at 40,000, I would have fucking bet so hard against that. So again, God bless him for what he came up with this for, but man, looking at charts like this just fucking make it more hard for me, make it more confusing.
Shannoni?
Long term, the price target is higher. That's what the markets have done over time. And it's my job to manage risk along the way and pick my spots for my time frame. And I believe that Howard's right, that you've got to have some money indexed and just say, hey, I'm going to let the averages be average and not worry about the path they take or how long they get there. But over time, you just can't bet against this thing.
Yeah. And I will say, I think to take away from this, from what I've heard today, is just where the markets are. We can see that we're all expressing bullishness, but not that you should go chase stocks. I think the way Brian and JC explained it with the world markets and where the buyers and sellers are, we're in a very comfortable position. The two cups with no handles underneath the market, where there's some confidence. Like people want to buy. People feel they're not fully invested. That can change, and we could come on in 2 months, and these things, we could be below the VWAPs on the indexes. But right now we're in a lot of markets, from copper to gold to oil to semiconductors to degenerate stocks, all have buyers. I don't know how. Like if you had told me that 7.5% interest rates, everybody would be looking to buy stocks. I wouldn't have predicted that. So that's why having these strong opinions is silly. You have to look at the different time frames and the different levels of multiple things. But everything that we've shown today, if we were to sum it up, would say, if you're short, you really might get lucky, but you literally have no idea what you're doing, right?
I would say, you don't understand. You don't understand markets.
That's all. Sure. Like, I'm not saying you won't be right, but you literally have not done any work to understand what's going on from what the four of us have been talking about. Doesn't mean we're not going to be wrong tomorrow. I'm just saying you have been on the wrong side of an obvious thing for the last year. And we've been talking about that here. Now, is Solana going to 10 bag again? No. I mean, God bless.
Oh, by the way, for almost 2 years, we're almost at the 2-year anniversary.
Yeah, we've just been
those list peaked in June of 22. Yeah, that's in a couple of weeks.
Meaning, people can make fun of us or whatever. I can't remember a show where we didn't understand what was going underneath. We had our reasons to be bearish. We don't like the government. We don't like what's going on in the wars. We don't like what's going on in our college campuses. We don't like what's going on with our politicians. We don't like what's going on with the haves and have-nots. We could argue about that all day, and we do on Twitter. But what's not arguable is the four people here understanding that this is a bull market. I don't even like the term bull market. It's like you're crazy if you're short. It's just.
I think there are opportunities to be short. I think there are stocks that have done very well. Lululemon's making new lows today. I think it's really more of a function of understanding the leading stocks that are driving the market higher, those that are being left behind, understanding that sector rotation is a thing. I mean, Brian's talked about 4 different sectors today. I think there's a time and a place for everything. And during a bull market, there's just more opportunities to be buying dips. Investors are rewarded for owning stocks, right? We had a bear market. So, if people that after seeing a bear market are looking for a new bear market immediately afterwards, like it doesn't really work that way.
Well, and by the way, there's one that's continuing and getting worse, growth. Like there's one that is like Lulu. There is certain areas of growth that are in a vicious bear market and there's no end in sight. Lulu's competing against 1,000 other brands right now. It's not just that it's not that Lulu sucks. It's that Lulu attracted 1,000 copycats, right? The reason NVIDIA hasn't stopped sucking yet is no one can catch them. There's a couple companies that like people want to bet on, but we're a long way from NVIDIA being Lulu in the sense that there's 1,000 compute competitor. Right now you can buy your Lulu pants at fucking Walmart. Like that is a little tired. So you still have to have some fundamental instincts and use your eyes and ears. But, the one thing I'm proudest about with Trends with Friends is if we go back, we've seen these underlying bullish things and being short, like you were on Lulu, JC, I remember that call. You can get short, but the market has been telling you for, a year and a half, 2 years that the math and the odds were the dip buyers were in control. And it's broadening based on what I saw in your world index. It's broadening, not declining.
So it's becoming harder. So what that means to me is that it's becoming harder to find short opportunities and becoming easier to find long opportunities. Like that's really all that really means to me, right?
Me too.
And Brian does a good job of sort of discovering that from the bottom up. And I agree, we definitely do that too. We do our scans where we find, groups and names that are doing well. And a lot of times that matches up with the top down work. And, that's really interesting. Like that, Buenaventura has been working and, copper has been working. So when you're looking at all of these different dynamics, you're going to find these names simply because they're showing relative strength. Like if you're looking for relative strength, you're going to find them.
And here's the other thing I would tell you. 4 o'clock ends in a bad market. We all know because the weight of the market feels different. We all will leave our desks not worried about who's going to report and what the reaction is going to be. So I'm saying there's such a underbelly of like mood and like confidence. Could be good, could be bad. But right now we're in a period where no one's thinking about the end of the world except the major me's because they got to do clicks. And so it's really fascinating how the fundamentals really are good underneath this market. I can't explain it though. Go ahead, Phil.
I was going to end the program, but we have one more chart candidate for most interesting chart of the world. Steve Ellison posted this on Twitter a couple days ago. 53 years of reasons to be bearish, overlaid with the S&P 500, a 50-year chart of the S&P 500. And he just lays all these out, like there's a million of them. Trade deficit, peak oil, Brexit, trade war, COVID, inflation, recession certain in 2023, Iraq invades Kuwait. It's like that Billy Joel song, We Didn't Start the Fire. There's like a million of them for every single era.
Remember the sequestration and you had the taper.
We had the last year the all-in guys had the death of the dollar. That's always the new ones, like the debt and the deficit and the dollar. Like that's been a year and a half of the U.S. dollar. We're going to pay for this, and I'm like, all right. Like I don't know what that means. It means that gold's going up. It means that Bitcoin's going up. It doesn't mean the world's coming apart. Like it's just such stupid bear arguments. Price action, as Brian said. Price pays. If you get used to checking prices, you will become a better investor. I know that sounds so goddamn dumb, but price is news. Price is what pays. And Stop reading stories and start checking prices. After 6 months, you will become much better at understanding everything.
Lindsay, that's a great quote. Stop reading stories and start looking at price. What does he say? That was a great quote.
Yeah, Brian always shouts me.
He's
out
talking
for my
your
price
book,
stuff.
bro.
No, I'm not
the way
talking.
you put that.
I always talk to. Yeah,
I'll tell you from one of the first of these trends with friends, Howard had really a great quote, which is, "Price action is freedom of speech."
Yeah, the price is your freedom. Vote. The problem that Robinhood traders have, and this is on Robinhood, and they'll eventually solve desktop, right? I thought they should have bought some companies, is we've gone from, you squeezed everything down. So kids looked at 6 stocks. That's why they all got trapped. They looked at FANG, right? Guess what needs to happen now? They need to, that worked. That was a period in time where the world was compressed into this screen, okay? Well, that world is over. If you want to be an investor, I'm sorry, it's not just your iPhone. You're going to have to look at thousands of prices. You're going to have to learn some discipline. You're going to have to look at other markets. You're going to have to learn what other people do. Sorry, that was a period in time that is now over. So and the best way to learn about industry and business is prices. Prices drive storytelling. Prices drive behavior. So other people like to say, oh, if I do the fundamental, I'll know where the price is going. It's bullshit. Whoever's telling you that might as well be in an encampment telling you that there's genocide going on. That's how bad that advice is. Can you comment on that? Is that a good quote?
Okay, so let's go. Since we're talking about, like, we should have ended this show like 10 minutes ago, 15 minutes ago. But since we're talking about not, going away, I was going to skip trends with no friends this week just because we just didn't get to it. But just in this vein of moving away from the stocks everybody in the world is talking about, everybody in the world is looking at, it's all ball bearings
RBC.
These days. So here's this company that Riley dug up, has 215 followers on Stocktwits. Look at that chart. Look at that candle. It's a breakout 200. So nobody's following it, but it's doing something right. And it's just a boring industrial that they make, they make ball bearings. I did take a peek at their revenue growth. They're growing revenues like crazy. They're tied into the aerospace and military industrial complex. And they're just a quiet company making ball bearings, breaking out. It's all ball bearings.
Isn't it hilarious? So again, this goes to wow, we've got to screw up on Stocktwits on this, but this chart summarizes what JC was saying about the global markets and what Brian was saying about checking price across multiple industries. This is how you find quiet trends. You find stocks that have high price relative strength with no followers, right? How you get volatility is have Tesla, which has so many followers. You're chasing daily volatility and you're missing the forest for the trees, right? So what I had Riley create with Trends with No Friends is trying to peacefully find high price relative strengths that are just, of course, institutions own role. Of course, institutions own this, but 90% of the people that will supply volatility for this do not. And so the institutions are loving this because they can go to sleep at night knowing this company is executing. No one's following it. It probably is too small to be in an index and, eventually could become in an index. So you want to find companies like this, and Trends with No Friends is just so interesting around this. JC, does this look good technically?
I mean, it's going from the lower left to the upper right, so it's hard to fight trends. This thing, ticker symbol is RBC, by the way, Perlman on the New York Stock Exchange. This thing's been going up for quite some time. This thing's been working. This is an Eddie Elfenbein name. I mean, we say it all the time with some of these. This is one of those boring companies that they make ball bearings. I don't even know what a ball bearing is. It's a word that I've heard. I don't know what is it. What even is a ball bearing? What is that?
You never had a skateboard?
It's a little ball. It's a little metal ball.
And it bears things.
What is it used for? I don't even.
But that's what was so great
makes
about
the wheels
this
spin
stock
on a skateboard.
Is, think about Chevy Chase when he was Fletch and he pulled that out of his ass. That was what made that movie so funny. And And it's all ball bearings. And guess what? He was fucking right. If you look at this chart, the whole world needs ball bearings and no one's talking about it. So maybe NVIDIA needs ball bearings. I know they're the biggest wire buyer in the world right now, or copper. Like, so again, if you can look below the surface, below FANG, right? Netflix was dropped out of FANG and it's been the best performing stock within that group since it was basically no one cared about Netflix anymore, right? So sometimes you have to look below the surface. And I think that's the better you get at checking price and understanding timeframes, the better you'll become an investor. All right. Good chart there. That's a good one.
All right, guys. Brian, thank you so much for coming on. Dude, I love you.
My pleasure.
You're the best. And that's it.
JC, have a good week. Hopefully I'll sneak
Adios.
up there tomorrow.
Yeah, come by tomorrow.
See you, boys.
See you guys.
Woo.